All right, hey guys, Candle Range Theory Trader coming at you with another video, just showing you just a live check down. So very informal here. I just wanted to show you how I check down my charts on a daily basis. So let's say it's 11:21 a.m. Eastern Standard Time where I am. So if I were coming to the charts for the first time, this is my mindset of what I would be looking for when it comes to trading the candle range theory. Okay, so quick check down. I watch all of the currency pairs, all the majors crosses. I don't trade exotics or anything like that. But this is what I would do. Okay, so I'm going to start with Swiss yen. So the first thing I remember is that if you've seen any of the other channels, I look for the ATR candle first. If you don't know what that is, check the link in the description. That's going to tell you what that indicator is. And for blue candles, that indicator is number one because remember that the average true range, it has to be exceeded for me to expect a possible reversal. I talk about price being like a rubber band where it stretches so far and then ideally you want to see a retrace or a snap back to a mean. All right. So I like to see price being overextended before I'm hopping into it. So if this is your first time on my channel, you've never seen a video that I've done, just know that if I see a blue candle, I'm looking to go long. And if I see a yellow candle, I'm looking to go short. All right. So that's that. So I'm going to start with Swiss yen. So the first thing I look for is on this 4-hour chart. I trade the 4-hour chart. That's where I look for my ranges. I look at the candle, the 5 a.m. candle. I'm checking for the candle prior to the one that's going right now. So it's black, which means that it's not blue or yellow. So I'll just say no and go to the next one. All right. So this one here again, black. I go to the next one because it's not an AT. It hasn't exceeded the average true range. This one right here is also black, that 5 o'clock candle here, so I'm not interested in that one. So I go to the next one. See, this is also black, the next one, so I'm not interested. Go to the next one. No range there. Go to the next one. No range there. Go to the next one. No range here. Go to the next one. All right, so now here we go. This is one that I technically would have missed because here you have a yellow and as well. So let's get the range. So what I would do, let's say let's say it was back a little bit in time. If I did see an interesting one, I would mark the candle range high and candle range low. Now, sometimes what you can do is drop down to the lower time frames for an entry. The 1 hour is what I prefer. Some people do 15-minute. That's fine too. So the ideal entry here, I just marked the 4-hour range. Let's see here. When you see the money candle, which is the candle that pokes above the range and then closes back inside of it, I use a fib, and ideally you want to be in, if you're going short, above 50% of it. So that would have been right here. As soon as price would have got right in here, that would have been an ideal entry. Obviously, I missed it. I'm not going to chase this trade. But yeah, that would have been the ideal entry. And from that entry there to the bottom of the range, if it hits, would be good for 65 pips, which is great in my book. But again, I just missed this one, so can't take it. Sometimes that'll happen. Nothing I can do about it. Oh well. All right, so I'm going to get rid of this. Okay, and just because this candle here is blue now doesn't mean it's going to stay that way. The candle has to close first. All right, so I'm only looking at closed candles. So that would have been one that I missed. This one here I already had eyes on, but I did not take it because you had a yellow candle here. So I mark. Okay, now see, even though I'm checking this 5 o'clock candle, I'll go as far back as 9 o'clock. All right, so which is right here. I should have mentioned that. All right, so I would mark the high here, the low here. All right. Now, interestingly enough, we'll see here where the high of the day and also the high of the week was just created. We love seeing that. So this could be a money candle here, depending on how it closes. It's still active. If you're a gambling man or woman, you could take this now if you want, if you think this high is going to hold. But it could. I've seen price start like this, and then this candle just shoot right back up and keep right on going. So time will tell on that one. But if this candle closes and this high holds, then I possibly could be looking at taking an entry. So I would just mark that and then go to the next one, which is what I'm going to do now. But again, as far as ranges go, I'll only go back to about, let me get rid of this, 9 p.m. on the day. Okay, so had a short range here. That range pretty much already got filled, but now we have another long range, a short range here. So we mark the high, mark the low. This one probably is one that already got missed as well. You know, if you drop down to an hour, same deal, fib. You know, ideal entry would have been in the 10 o'clock hour at that level right here. And if you could have caught that and rode it to the bottom of the range, that would have been good for about 63 pips. You know, but it's too late. I don't, if price isn't above that 50, that stop loss would just be too big for me. I wouldn't be interested in that. All right, so next. Okay, so these are all black candles, not interested in that. This is consolidating, not doing much. This one here. This one here, I'm actually in this trade, so full transparency. It may or may not win, but obviously you have your money candle here. Okay, money candle created the high of the day, also the high of the week. So we like seeing that. That's my entry up here. So I'm in profit a little bit. This high has held. It's held for more than 4 hours, so I like seeing that. Let's see. So from this entry to the bottom of the range, it could be worth about 61 pips. So that'd be good. But it all started here at this 9 o'clock range. So even coming to the chart around like 11, you know, sometimes the range will hold. But after you see a range, you definitely want to see that money candle and then go from there. So if I were coming to the chart even right now, because this money candle has held, I would take this right now and just set my stop loss above the high. So that would be that. As long as, remember, you draw a fib on your money candle, and if you're short, you want to be in above the 50% line of the money candle. Okay, if price is below the 50% of the money candle, I'm not trading that. All right, so that's how that works. Get rid of that. Go to the next one. Okay, this is another one that looks like I probably would have missed. It looks like I did miss, possibly, depending on how this candle closes. But you mark the high, mark the low. And like I said, always remember, most pairs will not give you a setup. Okay, you'll be lucky to find like 5 to 7 pairs a week that'll give you a setup. Drop down to the 1 hour. Okay, I want a 50% discount on this one. It looks like it didn't even barely get there yet. Sometimes that'll happen as well. Sometimes pairs will not retrace. They will not give you this 50%. If you want to kind of play this by ear, if you could have got in around the 50, that would have been good for, if it hits the bottom of the range, about 50 pips. So that will be fine. But again, these candles are still open, so there's no telling what they may do. This could just be a simple railroad track where it just pokes above the range and then go ahead and just tanks down to the bottom. But since this is dollar and there's a lot of dollar news coming up, who knows what's going to happen. But this is a good tradable range that you could have taken advantage of. Next up, nothing there. Nothing there. Nothing there. All those are black. Nothing there. That was a past range. Let me get rid of this. Okay, but I'm looking at today only. Okay, and there's just nothing there. Nothing I'm interested in. Okay, all these candles are black. I remember I'm just talking you through this and talking you through my thought process, but this is not time consuming. I could have been done checking all these pairs already. Mark the high, mark the low, drop down. Same thing over and over. Money candle, fib. Hasn't reached it yet. Price could, in theory, just keep right on dropping, but I don't know that. And since it's not, since I can't get 50% off, that would have been a trade I just missed. If it keeps dropping, you know, no guarantees. Nothing there. Nothing there. This is one, looks like I just missed this one. Yeah, this was a 9 o'clock. I'll mark this. This one may break out of the range as well, but I don't trade breakouts. High, low, but I'm just showing you that the entries, every single day you'll find at least one on one pair if you watch them all, watch all of them. Okay, so this happened at 9. Drop down to the 1 hour. We're on the hunt for the money candle. Boom, there it is right there. We mark it. Money candle creates the low of the day. When it does that, hey, all bets are off. Entry would have been right here at 3 a.m. London session. We'll mark that as an entry. I mean, it's easy, guys and gals. Okay, that would have been good for, now it's 18 pips, you know, not a lot. This is a lower ATR pair, but the pattern still plays out. Okay, from the bottom of the range, top of the range, you're done. Okay, but I would have liked for this to be bigger. However, you know, it just isn't, but the pattern's still the same. And it may break out, we don't know, but that's the move. That's all I look for. Same deal here. I'm not going to drop down anymore because I think you get the point. Okay, mark the high, mark the low. Okay, so this may be a money candle developing because it could be developing the high of the day right there. That's what I like to see. So I would be watching that. Let's see. Another one that pretty much got missed. We'll see here the range. Pretty much, if it's not complete yet, it may complete a little later. Money candles right there to make the low of the day. Going up, no big deal. Pound Swiss, all black candles, nothing there. And then lastly, Euro Pound, which moves like a slug. This probably, yeah, just missed this one. So candle high, candle low. With low to ATR pairs, though, I mean, I like big ranges. Sometimes they lead to bigger stop losses. So the trick of having a small ATR pair, I mean, sometimes you may have a stop loss of like 5, you know? Like say, for instance, with this one. Let's just say hypothetically, and this will be the last bit of this video. Let's say I drop down to a 15-minute. Even that, I mean, geez. You may have had to drop down to a 5-minute because it moves so quick. This was 15 minutes right here. Just poked above it, boom, you know? There's just not a lot there. But this range is only 22 pips, you know? Which is decent because I mean, if you have $10 at $10 a pip, that could be $200, you know. So if you have a $5 stop loss, I'm sorry, a 10 pip stop loss, $10 a pip, so you could risk $50, okay, to make $200, right? If that makes sense. But for that, you got to have a big account. So you can trade these lower ATR pairs like the Swissies, pound. Definitely not the yens, but it's really these on the bottom half. These are like my last resorts, but because a lot of these, the average true range just isn't that much. But if you can get a small enough stop loss of like 5 to 10, you know, if that high day holds and you can just catch the range, and if it's tiny enough, your lot size is going to be bigger. But I mean, hey, would I risk $50 to make 200? Sure, why not? Okay, so but again, it has to be the lot size. So that's it. That's just a live check down. I wanted to show you that real quick, just real informal. Any questions or anything like that, definitely leave a comment. Please like and subscribe to the video. And my promise to you is that your trading will never be the same. I appreciate your time and attention, and have a great rest of your day.